Hey everybody, it is Friday the 6th of May 2022. This is Brian Shannon from Alpha Trend speaking. We had another down week for the most part. Yes, semiconductors rather were higher, as was oil and bank stocks, the financials. But across the board, we were pretty much down. And of course, the weekly number down 0.16% in the SPY doesn't begin to tell the story of what happened there. So let's take a look at the chart and try to make some sense of it. We've seen that the volume weighted average price we've been referencing for several months now at the volume weighted average price from the September 2020 high. It has been tested this week and we closed below it. So I think that we're eventually heading for this volume weighted average price from the COVID low, which of course is also 38.2% retracement of this low down here to this high up here. That comes in right around that 38.2% retracement. And that we're in a down market where we have had some significant rallies, but the path of least resistance continues to be lower. We're below a declining 20, 30, 40 week moving average, and that equates on the daily time frame. Also in here, that blue 20-day, green 50-day moving average all heading lower. We had a big up day on Wednesday. That was more of a little short squeeze reactive move, but the market continued back lower. So let's take a look at the 15-minute time frame here, and you can see that we had a 5-day moving average. It was just starting to flatten out and rise after Wednesday's move, but Thursday morning we gapped down and continued lower. What I had pointed out, if you were listening to my comments on Wednesday, was the possibility that if this market was going to turn higher, I expressed a lot of doubt of that it would maybe come down towards this level and the volume weighted average price from this low. So I wanted to follow up on that scenario and say again that this is why you don't buy the dip. It might have seemed like a good buy at 425, but if you were looking at the momentum and the fact that the market was lower for that day and below the daily volume weighted average price, I'll just color that red to make it obvious. You can see that it spent the entire session below that volume weighted average price, so there was absolutely no reason to buy. We don't want to buy dips even on shorter term time frames. What we would have wanted to see was maybe it came down to this prior resistance in here, and then if it had come down to that level, begun to stabilize and then get above this volume weighted average price and begin to show a move like this, then it would have been okay to be a buyer right in here. But instead, the market remained below that volume weighted average price, and you can see even today that the volume weighted average price from the gap lower on Thursday held as resistance all day. So we're back to even on the intermediate term time frame, guilty until proven innocent. And this is how we use those time frames together. If you had purchased on after the Fed, great, but you have to protect those gains. We're in a primary downtrend, and I think that again it's highly likely before this market is done declining that it comes down to here. That's not my price target. That's not where I'm looking for it to decline to and stop going lower. I'm not looking for a bottom. A bottom will come in place well after the fact is when I'll be able to look at it and say, hey, that was a bottom. When I identified a bottom in the S&P, after COVID, it was somewhere around here. You don't have to catch the low. Quit trying to be the hero and trying to buy the lowest point on the chart. It might end up being here, but it's unlikely. It's just a level of interest on the downside. If it comes down to there, I'm not going to be a buyer unless it says the market tells me it's okay to on the shorter term time frame. And what we're going to need to see is that these moving averages are going to have to flatten out and turn higher. If they don't scare you out, they'll wear you out. The Fed is no longer accommodative. The dips are not going to be purchased the way they were. We've got a monetary policy that is tighter, and it's going to be much more difficult for these stocks to rally. All the stocks we've been talking about over and over again continue to get slaughtered. Upstart, it had a little bit of strength this week, but if you look at even PayPal over and over again. I can't tell you how many times people have told me on the way down over here, and never mind the people who told me at 220 that it was a good company and a good buy. I've been getting yelled at by people saying that it's a good company and we should buy it. Oh, the lows are going to hold. Well, guess what? These lows look almost identical to what's happened in the biotechs that we've been talking about over and over again. That the market came down, it rallied up to that trend line, it failed there, and and broke a lower low. Well, guess what stock that also looks like this week? Palantir. This thing is just a piece of garbage, and there are still people hanging on to some kind of story. I don't know what that story is, but we're getting close to the point where every single person who owns Palantir on the long side is down on it. It has been in a stage 4 decline for for close to a year, and there has been plenty of opportunities to get out of it, and more important, not to buy garbage in downtrends. You might say, but Brian, it's a great company, it's not garbage. Well, same is true for Teladoc, and we have our famous fund manager who added significantly to that, and that's still continuing lower. There's no reason to buy this garbage. If this is the low, fine. You'll have, and if it's heading back to the highs, you'll have plenty of opportunity over the coming year, 2 years, to be able to look at it and figure out when to get involved. And don't listen to these bullshit takeover stories like we saw in Peloton. I'm sorry, Peloton over here. When it was at that point, I said I wouldn't be a buyer. It looks like a gift to the sellers. The takeout rumor in Peloton came, over close to $40 per share, and here we are at $15. People who buy these downtrending stocks listen to the message of the stock, not to the rumors, not to the analysts, etc. The NASDAQ down to that volume weighted average price from the September 2020 high we've been talking about. Below that, if we fail to continue lower, then I think you've got to look at the volume weighted average price from June of 2019. That brings it down to 296. 300 will, of course, be a round number, and we might get a bounce in there. But again, in a downtrend, the sum of the declines is greater than the sum of the rallies, which means there's less opportunity on the long side. It doesn't mean you can't make money when the market begins to rally, but at a minimum, you need a flat to rising 5-day moving average. You don't want to chase the stock. I was very clear about that on Wednesday. Don't chase this, but if you were looking to be a buyer, look for it to pull back, and then maybe it would have done something like this and purchase right here with a stop underneath that level. And if it continued to rally, great, raise your stops under these higher lows until you get stopped out, because the bigger picture, the bigger energy is money still flows out. And if you're fighting the trend because you think it's a value, or you think you know something about a particular company or the market knows more than you. That's just a fact. I'm not being mean here. I'm simply pointing out what I've been pointing out all year. We're in a downtrend. The sellers are in control. Don't buy this shit as it goes lower. Wait. You don't have to be in the market. Everyone has this logic that they need to be involved, and you don't need to be involved. Look at the Russell 2000. It continues to do exactly what it's supposed to do. What is it supposed to do in a downtrend? It's supposed to make lower highs and lower lows. It's guilty until proven innocent. The declining 20, 30, and 40 week moving average, we had saw prior support broken, acted as resistance, and another leg lower. Look at any textbook about technical analysis. It's doing exactly what it's supposed to do. A pattern of lower highs and lower lows on that weekly time frame and on the daily time frame as well. We've broken, of course, below the volume weighted average price from the COVID low. What that tells us, the average participant in the Russell 2000 on the long and short side is 188. So who's in control, the buyers or sellers? We know for a fact that from the beginning point here or any point after that, the sellers are in control, and the average long participant is losing money. Where does this have the potential to go on the downside? I think it's highly likely that we come down to this prior resistance at 170 and test that, and who knows what happens there. We'll take it one piece at a time. I'm not here to make these grand macro calls that so many people try to be a hero and make a call about. Instead, I'm looking at the pieces of the puzzle as they fit together over days and weeks so that I can exploit these trends and make money. I'm not a super aggressive short trader, but that's where I've been making my money lately, is on the short side, because that's what the market tells me to do. Not because I enjoy being a short seller and I'm a negative person. It's just the opposite. I like it better when the market goes up. It's a lot easier. Downtrending markets are difficult. We're below the 38.2% retracement in the semiconductors. Now, we saw a little bit of strength this week. The market was higher, as mentioned. The semiconductors were up 1.2%, but it's done absolutely nothing to stop or change this downtrend at all. We have a declining 20-day, 50-day. We fell short of the volume weighted average price from that prior peak right there. So if we look at a 65-minute time frame, we can kind of reframe that right here and put a volume weighted average price off of that. And that's where we failed this week, is the volume weighted average price from that April high. Why do we use 65-minute charts? I know a lot of you know this because I mention it all the time. There's 390 minutes in a day. If you divide that by 6, you get 65. That means there's 6 equal candles. If you were to use 60-minute charts, you would have one 30-minute candle and 6 60-minute candles. Thereby, whatever moving average or oscillator or indicator you look at, you're giving more weight to that 30-minute period than the same weight as you are to the 60-minute periods. Use 65-minute charts. If you don't have access to them, use 30-minute charts. Use 130-minute charts because there are 3 equal candles per day. 195-minute, there's 2 equal candles per day. Same thing I've been talking about for the last decade. Back to the biotechs, guess what? They're breaking lower, making lower highs and lower lows once again, just like a market in a downtrend is supposed to. We're at the volume weighted average price from the peak in 2015 and the low of 2016. That means the average participant since that point is at about break even right now. What a waste of time buy and hold has been in the biotech stocks, over that period. Now, of course, if you go back further, you could say, well, Brian, I've been holding since 2010, and that's great. Just have a strategy to lock in your gains, or a portion of them. As it broke below that volume weighted average price from the COVID low, look at what happened to the biotechs. Is that what's going to happen to these to the Nasdaq? Is that what's going to happen to the Russell 2000, that it follows the biotechs? It's most likely. It doesn't mean it's going to. It doesn't mean I won't change my mind if new evidence presents itself, but the path of least resistance is lower. Financial stocks most likely headed towards that volume weighted average price from COVID, and then as a bigger near-term target, but it doesn't mean that's going to be the low. Energy stocks were the only things that continue to move higher. They came down right to that year-to-date volume weighted average price 2 weeks ago and just rocketed higher. So energy, we've still got buyers in there, and guess what's going on with Bitcoin? No surprise, it continues lower. It's in a downtrend. It's most likely going to test this volume weighted average price from July of 2020, and if it fails to hold there, what might happen is it comes down to that level, bounces up to 38, gets people excited before the next leg lower. These markets are all in downtrends. Stop buying things in downtrends if you want to hang on to your money for when times get easier again.